It's time for another Southern California real estate market update. We do these every 2 weeks, and this is the September 2021 wrap up. So we found an interesting trend in median home prices, and this doesn't necessarily mean the sky is falling, although prices are changing. We also are going to go through the new listings, pending sales, and closings for Southern California counties. And there's still one that stands out above the rest as a crazy seller's market. And stick around to the end. We're going to run through and tell you the things that we're tracking in the market. There's 3 things that could lead to a change in inventory levels. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers and tenants and landlords in these crazy days in California and beyond. So if you're ready to dive into the Southern California housing market update for September 2021, hit that like button and let's get started. So here we are with the Orange County numbers, September 2021. It was a crazy, crazy time. But let's compare it to other Septembers and see. And it's pretty easy to tell right off the bat by looking at Orange County that we have that darn twist. Listings are at crazy record lows for Orange County, and pending sales are high. So you can see year over year the pending sales are down. They're still at a record high if you take out 2020. Obviously 2020 was a crazy time for real estate, but the difference between last year and this year is about 1,200 listings that we're missing. So that's crazy. That makes a big difference. So despite a drop in pending sales, the number of new listings is down dramatically. And that is leading to a crazy seller's market still in Orange County. So this is different from what you're hearing about in other parts of the country and different than some of the other counties we're about to cover. And moving to the north from Orange County to Los Angeles, a very large place, lots of sales. You can see that listings are down slightly. You can see that year over year things are flat. So pending sales are flat compared to year over year, but inventory has dropped, so new listings have dropped a little bit. But it is still a busy seller's market in Los Angeles. Not as crazy as Orange County and a few of the others we'll look at here, but still a consistently busy place to be buying real estate. And here we are in Riverside, so we can see that listings are uneventful. It looks like a couple years in the past. Definitely down year over year. Pending sales are down year over year. No surprise, last year, 2020, was a blip, but pending sales are up dramatically compared to 2019 and before, so pre-COVID. So it's still a busy place. We have people who have been priced out of Orange County and are driving to Riverside to find homes. And some of those folks are being priced out of Riverside. San Bernardino, so we can see that we have an uptick in the number of properties that have gone under contract. So things are heating up. And part of the reason is San Bernardino is a slightly more affordable market, as we'll see when we get into median home prices. So if this continues on this trend, you can see that it could lead to a twist. We'll take a few more escrows, but you can see if it continues at this pace and the listings don't pick up, that we're going to have a twist here in the next couple months potentially. So we'll keep an eye on San Bernardino, one of the more affordable markets, and obviously now one of the busier markets. Ventura has been consistently atypical amongst all the other counties in Southern California in that pending sales have dropped. So we're not at record low pending sales like we had past times we ran Ventura numbers, but we're still low. You can see listings are down year over year, just as pending sales are down year over year, but this is definitely, as compared to other spots in Southern California, things are slower on the sales side in Ventura. And San Diego is a lot like Orange County. They've been running pretty close together, and what we have here, we may have a twist, but the numbers are all crashed together. And this is definitely a sign of a seller's market when you see listings that low and pending sales that high. So things are down year over year, but again, and I'll keep saying this, not extraordinarily low, not even back to seasonal levels. So we're still up if you look historically year over year, going back pre-COVID. And let's dive into the multifamily numbers for Southern California. One of the few places you can get those is right here on my channel. And here we go. In Orange County, we're getting close to a twist. And we've been seeing this in Orange County for multifamily. It's a very popular spot. So we've seen that the number of sales, the properties going under contract, has been at record levels, and we see listings are down. Now, year over year, we see an increase in the number of properties going under contract. Whereas in single family, we saw a peak last year and a drop in pending sales in many parts of Southern California, here we're seeing an increase, and that is because back a year ago, it was still a scary time to be buying multifamily because of eviction moratorium. So those have since expired for many spots in California. So September's numbers won't reflect that because the California statewide eviction moratorium expired at the end of September. So we may actually start to see a heat up in sales October going forward. And Los Angeles, it's pretty consistent market, consistent number of sales. We did see a drop here in the number of listings. Year over year, a big drop in the number of listings. And we see a slight increase year over year in properties going under contract. So kind of an uneventful market, a lot more sales. The most of any of the Southern California counties occur in LA because it's so darn big. And Riverside, we see a big drop in listings. I don't know, suddenly everybody decided they're going to hold on to them. So we've got record low number of listings, and pending sales have stayed pretty flat in Riverside. This is a bit surprising because Riverside is a solid multifamily market. I know some of my clients who own multifamily in Riverside have been suffering because their tenants haven't been paying, a little more than I've seen in Orange County, although LA tends to be worse. So this could be reflecting that fact that there's just not as much desire to buy in Riverside, but we will see if the end of the eviction moratorium for October, November, December numbers makes a change. In San Bernardino, we've got an increase in the number of properties going under contract, but you can see historically it's not a record high. Neither are the number of listings. Just a solid market if priced right in San Bernardino. For a multifamily building, you will be gone. And Ventura, poor Ventura, just not enough numbers to put up, but we still run through it. So we actually do have a twist in Ventura, but with so few sales, it's not as big of a deal. But I will say, if you're in Ventura and you have multifamily, it looks like you will get multiple offers, unlike if you're selling single family. You might have a little tougher time based on the numbers we've seen. And finally, San Diego multifamily, we can see a consistent increase in the number of properties going under contract. And San Diego tends to be a desirable market like Orange County because you're near the coast. You could say the same thing about LA. LA is obviously near the coast as well. But San Diego and Orange County tend to have more of the coastal vibe for more of their multifamily. LA is very spread out, so a lot of people don't think of it just as the coast. So anyway, long story short, we see an increase in sales in San Diego. This will continue, and again, we'll see how eviction moratorium ending leads to an increase in pending sales and ultimately an increase in number of closed sales. So there are the multifamily numbers for Southern California. And since we're wrapping up the month, of course, we have to run through median home price, and here we go. So it is no surprise that prices have increased. We've been talking about that and the changes people are making because of that. But here is what is interesting, and we called this out before. It looks like we have a price peak for most of the counties we're covering in Southern California. Around June, it looks like prices peaked for single family, condos and townhomes in many spots in Southern California. And you can see that we have a slight plateau and even a drop. So the peak, for example, in Orange County in June was $920, and now we're down to $910. So a loss of about $10,000. For LA, $835 down to $820, so $15,000 loss. These aren't big numbers. It's no reason to panic, and I'm going to show you in a minute why this is potentially happening, because it happens every year. So typically, what ends up happening is prices seasonally will begin to drop. But real fast, just want to show you over here, Orange County, year over year. So we're going to start to see this number actually start to shrink because we're getting past, you see this big run up in values. At some point in time, we're going to get to the end of this, and year over year, we will see smaller increases, and then we'll see actually decreases potentially. Here we have 16% for OC, 11% for LA, and about 19% for Riverside. You've been watching these and you know that we've had numbers close to 30% year over year, but those are leveling off. We're getting later into, year over year is getting later into the cycle where the prices rose. So we're gonna see that year over year percentage adjust. Now, quick thing I wanted to show you. So when you look at this over a longer term scale, this goes way back, you can see the jagged scale. And what this is that seasonally prices go up, and then late summer, early fall, they drop. And that's what we see here. They get down to the bottom at December going into January, prices are at their bottom, and that's where you see all the low dips are right around the holidays. So it goes up, and then it comes down, up and comes down. Then of course, with COVID, so we got a big drop here. That was as COVID was starting. We had that big drop in values because everybody was worried, we didn't know what was going on. Then we had a huge increase, got into the holidays, things slowed down a little bit, and then shot off again. So spring 2021, we saw huge increases. So anyway, and that's what's reflected in the data here. So to see price decreases, median price decreases right now, is not shocking. In fact, it should be happening. So just wanted to make that clear that this isn't the sky is falling. We're actually getting back to a normal cycle in the market. In the other 3 counties in Southern California that we're covering, so San Bernardino, Ventura, and San Diego, you can see, again, the increases have leveled off. They're not 30% anymore. For San Bernardino, it's 18%, Ventura's around 10%, San Diego's about 15%. So same thing as we discussed before. You can see the big run up in value. Interestingly, there was a drop in Ventura County. Now, part of what this is we saw a shift in this number of sales. So Ventura County actually slowed down before any other county. And that's leading to this jaggedness in the median home price. When you get a big swing in the number of sales, that can cause that as well. So up and down and up and down. All 3 of these counties have previous peaks, and we are down lower at this point in time. So you can see, like I was discussing in the San Bernardino numbers, it's a more affordable county, and that could be leading to the increase in the number of pendings as people are trying to find a place to buy and are forced to drive farther and farther away to find a place. So these are your median home price numbers. Again, the drop we're seeing is a return to seasonality, and that is not a bad thing, not a scary thing. As we always say, we can't give tax or legal advice, but for the most honest and up-to-date real estate advice, subscribe to this channel. All those charts and data you just saw, our email subscribers get that. So click the link below and join thousands of others who get that weekly email newsletter. So thanks for sticking around to the end. I promise to run through 3 things that are going to change inventory levels in the market. And number 1 is forbearance ending. So the forbearance programs that we've talked about in other videos, those have come to an end. And now folks are being kicked out of forbearance. Those who went into forbearance early on during the pandemic are now coming out the other side. And the major difference is they actually have a lot more equity now. Many of them are up 20 or 30% in value since then, but there are still some who aren't going to be able to continue to hold on to the property. So they will sell, and it will be either an equity sale or they may be foreclosed on. So it could lead to an increase in foreclosures as well. So there will be more inventory coming from the end of forbearance. Number 2 is the end of the foreclosure moratorium. So foreclosure stopped for a while during the pandemic. Very few were going on. It was uneventful to track those, and even though we were. And now it is time to start up again. So the foreclosure moratorium ended at the end of July. So it's still going to take a little while for those to move through the process, the notice of default, notice of sale, and finally the sale. But we should start to see those first or second quarter of 2022. So this will lead to more inventory. But remember, circling back to the end of mortgage forbearance, a lot of folks now have equity. So it may not go to foreclosure sale, but it could still be a distress sale where they are actually being foreclosed on and are forced to sell without actually going all the way through foreclosure. And the last thing that will lead to more inventory, number 3, is the end of the eviction moratorium. So throughout the state of California, the eviction moratorium ended on September 30th, 2021. And a lot of landlords now in the state of California can deliver a notice to terminate tenancy. And this is a big change from April 6th, 2020, all the way through September 30th, 2021. It was very difficult to terminate a tenancy for a landlord, very difficult to evict. So we're at a point where a lot of landlords are fed up, and they may end up bringing those properties to the market. So these 3 things I mentioned could lead to increases in the level of inventory. There shouldn't be a dangerous level of inventory that leads to a retraction in Southern California, but you can see places like we've been showing, Ventura, where they don't really need much more inventory. In Orange County, it looks like they should be able to absorb all of that inventory and more. So again, it'll be interesting to see how this plays out. Let me know what your thoughts are in the comments below. Do you think we're about to see a shift? Do you think it's going to be more normal times? I want to hear what you have to say. Thanks for tuning in. This has been Christian Walsh with Wire Associates, and we appreciate you.